Mark Phillips. Welcome to One Question with an Expert. Are you ready for your two-part question?
I am. One or two questions. Both sound good, Brett. Thanks for having me.
No, awesome. All right. So macro first, and it's one question, but two parts. So, as we're starting to see the light at the end of the tunnel of the pandemic, vaccinations, things are starting to open up. What are you looking at a macro level, for the remainder of 2021 and into 2022, which I can't believe we're saying.
Yeah.
And then part two of the question is, what specifically are you looking for as a VC as we, again, same time frame? So.
Yeah. Well, great questions, Brett. Thank you. One question, two parts. I love that. I'll start with the first and happy to get your thoughts on it as I give the answer. But it is kind of unbelievable. We're halfway through 2021. 2020 was quite a year. As we launched our fund earlier this year, Brett, we were really focused on a few specific thematic investments coming out of what COVID has done, right? Particularly, there's really three segments that we like to focus on. The first was really distributed workforces, right? That's kind of simple. People are no longer going into the office. That's going to change. I don't think we're ever going to get back to the same where everyone was in 8 to 5, 9 to 5, 5 days a week. So how are we creating opportunities for collaboration, opportunities for efficiencies of workforces, all of those sort of distributed workforce topics? So I think that's a theme that we're really bullish on and we're going to continue to focus on. The second was really in education.
I'm going to stop you there because I want to ask you a follow-up question.
Please. Yeah.
Because we're starting to see some of the return to the office. And one of the things I've been advocating for, people aren't against going to the office. People are more against a commute, right? Yeah. So you give people 15 months of not doing an hour each way plus, right? So 3 hours your day is in a commute. Now I haven't done that for 15 months. Now you want me to do it again? I'm like, good luck, right?
Hard pass. Yeah, hard pass.
And then two is from a social aspect, right? People say, well, they need to be in the office, they need to engage. I mean, I 100% agree that people need to be social, but if they can replace that time locally, right? Having with either peers, colleagues, just people in the same industry that they could be social with in and around their remote force. Is that good enough to kind of replace? Because at work, man, you and I work together. We like to hang out. That's not always the case. So right. A lot of context there, but just curious as you see that work from home, I think we're still in the early stages of seeing how this is going to play out.
Yeah, it's a great point. Thank goodness we both like golf, right, Brett? That allowed us to really become friends, not just colleagues. I think it's a really important point. Everyone's got their own personal preference. I have seen a couple of companies. We actually had one that we chatted with last week that are building, it's called Cohatch, if you want to look it up. And they actually started out of Ohio. They are building more community. Think of it as a community-based WeWork, right? Like WeWork is great, but it wasn't, there was community there, but it wasn't sort of like the hub of a community. So you think about perhaps the suburbs of Chicago. You think about big suburbs like Elmhurst or Wheaton or Naperville. People could have an opportunity to create community by going to work with people that aren't necessarily their colleagues. Yeah. I think that's huge. It doesn't mean you're not going to have that opportunity to connect with your colleagues. Maybe it's, hey, we're in the office 1 or 2 days a week. The other 3 days a week, I'm traveling 5 minutes to this community co-working space, and I'm making friends there too. What do we know about work as well, Brett? I mean, you and I have learned this full well over the last couple of years. It's about relationships.
Yeah.
It's about when did you ever get a good job just by sending your resume in through some cold outreach portal? Never. Maybe once or twice, people listening once or twice, but rarely, right? It's about the relationship. So even as you think about your career development, having places like that is really, really productive. So I think you're spot on, and I couldn't agree with it more.
I think it's fascinating. So we will have to have you on here later to go in deeper. I do want to do a full episode with you because I think there's a lot to talk about. But back to the one question, part two, I think you kind of alluded to what you're looking for, but specifically within a founder or a business, what are your criteria or, help us understand what's important to you?
Sure. So our fund is focused, we are industry agnostic. So there's industries that we like, we're preferential, sure, right? But we have industry agnostic approach. We focus geographically and thematically, right? Okay. So geographically, I really like to describe it as we avoid investing on the coasts. I am based here in Chicago. The Midwest is very fond to me. We've made investments in the Southeast and in the South. And I think that's really where we'll continue to play. That's really following up on my first point there, Brett, which is as workforces are distributed, you're going to be finding talent in these places that are, I like to use the two words, overlooked and underfinanced. That's our investment focus. And it's really twofold. We bring a very hands-on approach to investing as a fund. We bring in venture partners and advisors to sit on your board. I'll talk a little bit about founder well-being in a moment. It's really important and we're really passionate about it. And those two things coupled with better valuations in the regions that I'm talking about make it a really interesting investment approach. So that coupled with thematic, right? Like I said, the idea of distributed workforces, the idea of virtual education. We're making some investments in the ed tech space. We're really focused on agriculture as well. One of our venture partners is deep into the ag tech space. Sustainability, traceability of food sourcing, really important topic, particularly given all that's happened with what's happened over the last 14 to 15 months. Our focus when we make an investment, I just want to touch on sort of the concept of founder well-being.
Yeah, no, please. I think it's a huge differentiator. So yeah, give us.
I mean, we've all experienced some form of anxiety or stress or strain over the last 15 months. I don't think there's a single person who's been like, I'm happy as a clam, right? Life has been really difficult.
Probably on a daily basis for all of us at some point,
right?
Depending on the time. Right?
And you're starting your own thing here, Brett, right? And it's the experience and the up and down and the strain of entrepreneurship is real and sometimes underappreciated. The data is pretty sobering as well. So a couple points, 80% of startups, maybe closer to 90 last year, fail after 24 months. That's a crazy number. If you dig into it, 60% of the time, it's because of interpersonal or relational conflict.
Yeah, that's a challenge.
Depression, anxiety, substance abuse, co-founder conflict, bad investor relationships. These are conversations most VCs are not having, but it's something that we view as really important. And it's both, if you allow me to say, the right thing to do, right? Caring about the person. But I also believe it's frankly a strategy as well. What if our portfolio, instead of 15 to 20% of our companies are operational? What if it's 30, 40, 50% by the time we get to the end of the fund? Yeah. You're looking at meaningful returns for investors, as well as the flourishing of the people within those companies.
Which is huge.
Yeah. I mean, it makes sense. It starts to make sense.
And again, as you're trying to play the numbers and figure out how do I improve it even slightly over a bigger and bigger scale, it's going to pay huge dividends. And I think it's refreshing to hear a fund that's focused a little bit differently on that. And I hate to cut you off because I do want to spend a full episode on this. So folks that are listening, we will get Mark on to go deeper on this because I think it's a really important topic and I think we're going to see more of it. But dare I say a pioneer in this space a little bit, or at least you want a voice leading this way. So Mark, thank you very much for joining the One Question Plus with an expert.
Absolutely, Brett. It was great to be here and I'll look forward to doing the full podcast soon.
Sounds good. Thanks, Mark.